Then when I talk about the accounting treatment, so if a question says, discuss the accounting treatment, 20 marks, discuss the financial reporting implication, 20 marks, it essentially wants you to do what? It essentially wants you to tell them how the asset will get into the books, at what amount, what will happen afterwards, what will we need to recognize, and at what amounts. So it wants you to deal with the initial as well as the subsequent measurement. That's what it will want you to do. Deal with the initial and subsequent measurement. Initial recognition and subsequent recognition. So now let's just explore this a little bit more. So now I ask for an accounting treatment. In some cases, or generally, you'll need to know the classification of whatever you are dealing with. Is it IS2 inventory? Is it a PPE? Is it an investment property? Is it an intangible asset? That's usually question number one, that of classification. Then number two, it is of initial recognition. Number three, initial measurement. Number four, subsequent recognition. Number five, measurement. And number six, de-recognition. So if for whatever reason we say discuss the accounting treatment, think about all these things. So when you tell me you understand IFRS 16, you should be able to do all this. So now let's just now get a little bit closer here. So now when we look at this, so this is IS 16. Do you see how it is structured? So this is IS 16. Copy and paste. So let's look at it. Do you see where it starts? International Accounting Standard 16, and its name is Property, Plant and Equipment. Objective, that's what is dealt with there. Scope, definition, and then recognition. But notice that under recognition, it breaks it down a bit. It then talks about the initial cost and subsequent cost. So you might be wondering, what do you mean? So let's say, for example, you will go there to buy a car, and then they tell you that, oh, the car is what? The car is, you don't do that. So the car is what? The car it's it costs 50,000, 100,000, right? That's the initial cost of the car. But then they say to you, this car will need to come and be serviced every 15,000 kilometers or every year for the next 5 years. When you service it, we are just going to charge you a minimal amount of 10,000. So the car costs 100,000 and we're going to charge you 1,000 each and every year for service. So now you might be asking yourself, so tell me, how do I treat the 100,000? I'm thinking, is that the cost of the car? But knowing that I will need to service it for the next 5 years, do I now include those future servicing costs as part of what? As part of the cost of the car? That's what we ask ourselves. Or otherwise, what are we thinking here? We might be thinking that, oh, wait, and we've got what? We've got a house. We've bought a house, and we know that in order to keep our house to be of good value, we need to paint it every 5 years. So how do I deal with the subsequent cost of painting my house? Does that form part of the asset, or I treat it separately? What if I know that I've bought what? I want something that has got short-term in it. What has short-term in it? Yeah, I have bought this car, and every time I need to pour petrol in order to use it. Does that petrol form part of the cost of the car? Because I know that I don't use petrol every time to zero. Probably I pour every time it goes beyond the quarter or it goes beyond half. So it's like there's always going to be petrol that will be in the car. So does it mean that some petrol is going to be used for more than 12 months? I wonder. So measurement at recognition. When I say that we recognize this at cost, what is cost? Because surely cost cannot be what? The purchase price. Well, if the purchase price, it's simple. But now it gets complicated when the asset is constructed internally. So you are working for a company. The company then decide to manufacture its own building, a new head office. Then they say that, can you come? You'll be our project what? Accountant. So you get paid X amount per month. Let's say you get paid 100,000 per month. And then you are required on that project for 6 months. Oh, for 6 months. What do we do with your salary? Does your salary form part of the cost of the building, given that we needed a project accountant or a management accountant on that project, and we had to call you? Does it mean that your salary is going to be costed in the building? And that's the problem we had with what? With the trademark. That now that we are using the trademark and we are paying for it, where does that cost go? Is that the cost of the inventory? So that's what the standard is trying to analyze there. So, but do you see how then the standards are structured? So now let's just open one and let's just look at it together. Just to a high level overview so that when you open this thing, you understand how to think about it. So let me put it up here and share. So here we go. Do you see my IS 16? Okay. Where is my screen now? Bevan, do you have a question?
No, I didn't put up my hand.
Oh, sorry, I think it might be my side. All right. My screen is visible on your side?
Yes.
Yes. All right, cool. Yes. Sure. So every time you get into the standard, you find this page. Just think about like, what is it? The history of the standard. Usually not so important. It's usually important for us when we are talking to you about whether the current year standard is important or so on, because here they just tell us the history. So the most important thing here is this, just to make sure you have the latest standard. So here they say that this standard was last updated on what? On May 2020, when the board issued PPE proceeds from intended use, so before intended use, which prohibit a company from deducting the cost of the PPE amounts received from selling items produced while the company is preparing the asset for its intended use. Instead, a company will recognize such sales proceeds and related cost in P&L. So that's the last time they updated this standard. So that's why I'm saying is the history. Right? Then now we get here. Then now let's look at how then the objective is structured. So when I get to the objective, I then read, what am I here to do? They say the objective of this standard is to prescribe the accounting treatment of property, plant, and equipment so that the users of the financial statement can discern information about an entity's investment in its property, plant, and equipment, and the changes in such investments. Okay, now I am getting an idea, but what are we going to be considering there? Then they clarify the principal issues in accounting for property, plant, and equipment are the recognition of the assets, the determination of the carrying amounts, and the depreciation charges, and impairment loss to be recognized in relation to them. So you know what you need to come and learn here. So if I ask you that, do you know how to depreciate an asset? And you say you know IAS 16, then you don't know the principal issues. Do you know how to determine the carrying amount? You should, because it is specifically required. Then notice here, then paragraph 2, it's in a bold statement. What is the difference between objective 1 and scope 2? So the standard then clarifies this to say, oh, wait. When we write in bold, this is what we mean. What is that? Okay. So when you see a paragraph in bold, that's what we refer to as the main principle. The main principle. That's what we mean when we say as a paragraph is in bold. So if you start paging, you then see bold, bold. So those are main, bold, not bold. So the bold is the primary or the main principle. The others are just now drawing from that principle. Do you see that? So it's like everything in bold you need to understand. So that is the bold parts. Then some, you might say, oh, I saw some text in italics. Like which ones? Better plant, investment property, this and this. What are those? Those refer to, one, all the standard references are then in what? In italics. That's number one. Number two, all the definitions are then, when they start, they are referred to in italics for the very first time, all the defined terms. They are referred to or they are written in italics the first time that they are mentioned. All of them. So if now I'm busy reading, I'm reading okay, so this one is not as hectic because most of the reference in italics here are what? Are just reference to other standards. Oh, so there are not many definitions here. Maybe it's because they've defined them at the beginning. So let's just note that. So one, I see bold, main paragraph, then not bolded, an explanation of the main text. Then italics, definition being mentioned for the first time, or reference to another standard. Got it. Then the scope, let's see the scope. This standard shall be applied in accounting for PPE except when another standard requires or permits a different accounting treatment. So now this is very interesting. This standard will be applied for all PPE, except when another standard requires or permits a different accounting treatment. So what could that be? So maybe let's understand what is a PPE. That's how we think about it. So I come here and I say, what is a PPE? So I'm looking for a PPE here. So what is a PPE? So they say PPE are tangible items that are held for use in the production or supply of goods or services for rental to others or for administrative purposes, and are expected to be used for more than one period. So now let's think about it. Do you see from here that a vehicle will then meet the definition of a PPE? Do you agree? Then do you agree that if you got a block of flats, they will meet the definition of a PPE? Right? But a block of flats is not going to be PPE. It's going to be investment property, IS40. So now, when we are sitting there and we are saying that there is another standard that deals with property held for rentals, and a PPE is an asset that is tangible and held for rental, which of the standard are you going to use between the two? Which of the standard are you going to use? Do you see that? So based on the scope, which one are you going to use between IS40 and IS16? Because it's a one asset that meets the definition of two standards. So which one are you going to use when you read the scope now? Are you going to refer to IS40 to understand how to account for that property? Or are you going to refer to IS16 based on what the scope is saying? Which one? Who wants to give it a shot?
The one that is substantially used for.
So which?
I'm saying the one it is substantially used for.
So let's say it's only got one use. So the building, let's say it's your flat. In your flat, you've got two rooms or two rooms, and both of them you are leasing out. You don't stay there. And you then come and it reads that a PPE is intangible. So yes, your building is tangible and it is held for rental to others. Yes, you don't stand there, you don't stay there, so it's rental for others. And are expected to be used for more than one period. Yes, your building will last for more than 1 year. So those conditions are met. Check. Then there is another standard, which is investment property. And it says any property held for rental, it's an investment property and it needs to be accounted for using IS40. So now it seems like there are two standards that are where the asset can fit in. So there are two standards where this asset can fit in. But you come to the scope. So let's read the scope carefully. What does the scope say? Let's read the scope carefully because it's going to give us direction. And now, so the scope is going to give us the direction of which one we need to use between the two. So let's read the scope carefully. What is the scope saying to you? Because that's how you know when the item can fit into 2 where you narrow it back. So based on the scope, where will you account this property that you are leasing to 2 strangers? Helen?
Well, I would say IAS 40 because it has got specific standard, specifically deals with investment properties.
Okay, but why so? If you have to motivate, what will be your motivation? Because this one deals specifically with PPE, and based on the definition, this meets the definition of PPE.
Yes, if I were to look, I think that's when we're talking about the way it's bolded, it actually indicates the scope. And the scope, it shows what is it that is applicable, and below that, it will actually show the details. So in the scope there, it shows that except when another standard requires or permits a different accounting treatment.
Yes, so when you motivate, that's what you need to say. Do you understand? Because that's your reasoning of not using 16, because there is another standard that permits or requires a different accounting treatment. That's your reason. So the scope does that. So because transaction, they're going to get many and they might be similar, they might be confusing. So the scope will help you to know, am I here or not? Especially when you're sitting there and saying, it seems I'm in both. How do I know I'm supposed to be here or there? So as you are saying, the other standard IAS 40 requires and permits a different accounting treatment for assets held for rental or property held for rental. And for there, it is clear that we need to use what? IAS 40. So because that one wants us to use IAS 40, we come to 16. But you meet the definition, but no, there is another standard that requires a different accounting treatment. So we are required to use that because of this scope. Does everybody see how then the scope works? It tells us whether we are in or not. Nomfundo.
Arindani. So my understanding here is that, but please correct me, is that with this specific standard, we may call it in inverted commas a blanket approach, right, to deal with PPE. But where there is one that is specific to the question, we may then apply that one. So in this regard, we may apply IAS 40 and not necessarily, is this IFRS 16? Yes. But then what if I opt to actually use the IAS 16 instead of the IAS 40? Will I be marked incorrectly?
Yes. So
will I be downrated? Okay.
Yeah. So in that case, you'll be technically incorrect because the standard, then IAS 40, right? It has a specific accounting treatment, right? But notice something, because we are still under the scope, right? So now you go to IAS 40, and IAS 40 says we've got 2 ways to account for property. There is what they call fair value model and the cost model, right? And we're going to get to those things, but I just want you to get a sense. So then IAS 40 says, oh, I've got an accounting treatment for properties held for rental. It's fair value model and cost model. So we're going to explain what those are like later on. But now, notice what number 5 says. Number 5 then says, an entity using the cost model for investment property in accordance with IAS 40 shall use the cost model in this standard for owned investment property. So that's where now the standards start talking together. So you might say that, no, but wait, I've seen an investment property where they were treating it as PPE. That's because the scope allows us to do that. That when you go to IAS 40 and says, use cost model, you then come back to this particular standard. So if Nomfundo, you come back, you will only come back because the cost model has been used. Otherwise, you will still need to be in IAS 40. Do you see that? Yeah, so and that's why the scope is very important. The scope is going to be very important. Okay, Nomfundo, hi. Yes.
Apologies, that's a lazy hand.
Oh,
Sorry.
okay, sure.
Thank you.
And another interesting thing as we unpack this scope thinking, right? Think about a farmer who has a farm. And let's say they farm mangoes. So imagine with me what they have there. They have what? Mango trees, right? And in the mango trees, then there are mangoes on that tree. And then some of the mangoes have already been what? Have already been, I don't know what's the word, let's say harvested. And they are now sitting in cranes ready to be delivered to the retailers. So now tell me, if the farmer says to you that they want to account for that tree and its fruits as a PPE, will you agree? Does that sound right? What do you think? Where will you go if then the farmers ask you and say, guys, I've got a problem here. I want to account for these trees, and they've got mangoes. Some of them are still green. We can use them for acha. Some of them are going to ripen, and we're going to sell them to the retailers. But the tree is there and its mangoes. Can I account for this tree and its mangoes as a what? As PPE? What will you say? Does that sound right? Or what kind of information will you want? Okay, Helen says no, it's inventory. Okay, any other view?
It is used in the production of income, but if the standard, I see it deals with agricultural products,
Yeah.
and then unless it can be accounted for according to that standard. But it's not a PPE. It's not an inventory. It's PPE because it will be producing income, and then it's got a life expectancy. It can be depreciated over time. That's my thinking.
Okay, and fair enough. So, and this is where it gets interesting. Because now when you start here with the main scope, you'll then say, no, but yes, it's an agriculture cylinder saying. So let's go to the agriculture standard, right? Then agriculture standard says that you see that tree I was talking about. It's got two things. It's got the mango and it's got the tree itself. It considered those to be two separate things. So the standard will then say the tree is what it calls a bearer plant. It bears the fruits, and the fruits are the agricultural produce. So then the standard, now let's see. It says this standard does not apply to, okay, let's hear, to biological assets related to agricultural activity. So it seems that Linda is right, that we need to go to what? To IS 41, even though this tree can be used for more than one period. But it then says, other than bearer plants, this standard shall be applied to the plants themselves, but it does not apply to the produce. Do you see now? So do you see what the scope does? The scope is saying the tree, leave it in IS 16, but the mangoes go to IS what? To IS 41. So the mangoes, when they start being small and become green, big, then they change color, they are now edible. Then they are treated in terms of IS 41. Then the moment they fall down, they are now held for resale. They jump back to IS2. That is the power of the scope. And that's what we need to master and understand. Does that make sense? So you should never apply the standard without going through the scope. The scope will always guide you. So even if it sends you somewhere, go and check that somewhere. Is there something that will prevent me from coming into that standard, or that I need to think about? So the scope, it's always going to be our standard, because when the case study comes or when this task comes, they will never tell you to apply IS 16. They will just say, this is the problem, and you need to know how to navigate between the standard. And the more now you do it, the more you'll get to see the power of the scope. So then the definition, as I was saying, and then those other aspects. But this is how we're going to be doing it. And that's why I'm saying we will need to all have our standards for this particular purpose. We will all need to have our standards. So I see, yes, Masonowe, go for it.
Sorry, Rendan. I
Yes.
wanted to ask, when you are answering the questions, are you supposed to quote the standard, like in terms of, do you have to know them by head, that when you are dealing with a case study, you have to quote, or you can just apply that this is how we have to deal with this, or that according to this section of IFRS 16, this is how we should account for this, or how are you expecting incorporating the standards? Now I'm asking because sometimes they can be quite a lot, and now to really memorize them in terms of application is easy, but to code, I think that's what I was even struggling with in terms of whilst I was still in varsity, that most of the standards I could apply, but in terms of remembering that this is IFRS 17, this is IFRS 1, but that's where my problem was. So is that something that we are expected to know by head, that this is dealt with under IFRS 16, this is dealt with under IFRS 17, even after you've studied the standard and then you know how to apply them?
Yeah, so maybe to start from the bottom. So we will not expect you to know the specific paragraphs or to code the specific paragraphs in your answers. That's number one, right? So when it comes to quoting the specific paragraphs, no. But I think for you and I, the solutions that I'm going to give you, especially now in this CA conversion course, they will all have references, but it will be for your learning purposes. Because I'll want you to say, if now I'm saying that I'm applying, I'll want you to challenge me to say, but Rendani, I was there. How did you get here? So I'll write the paragraph so that you can go and check me and say, but why is Rendani using this? Or Rendani is using this because it says here, it's either you're going to learn or you're going to have a basis to challenge me. Okay? Then you yourself, when you apply, I'll say when we start, I will not necessarily be worried about you quoting the specific paragraph or standard, but I'll want you to show me that you understand the basis or the paragraph where you can say, in this case, we will need to account for the mango tree in terms of IS 16 because it is excluded from the scope of IS 41. So I'm able to follow that. And I'll want you to just tell me which standards you are using, not necessarily the paragraph. But later on, if you now are clear about the principle and you can just quote or clarify that you are applying this principle, then we will be aligned. It is just a matter of, in the initial stage, let's just make sure I know where you're coming from.
Oh, okay.
Yeah.
So otherwise, in terms of, let's say when you are in the APC, they do not expect you to code those things. Okay.
Yeah, no.
Okay.
So yeah, no. So and I think so that is that the other part of the question will be when we start talking about how to apply the standard, how to really now bring, because some paragraphs are very long. So I will not want you to even repeat them. I'll just want you to extract key points and deal with them. And we're gonna refine that process here.
Okay. Because the reason I'm asking is that back in varsity, when it comes to text, you would have to even quote the paragraphs that according to section this and this.
Text, I think you still have to. I know text is weird. And text, I think even if you get the paragraph wrong, it's a penalty. Whereas here we can forgive you. But text, I know they are weird. So that I'll say save it also for the text lecturer, that to say to what extent will you want the paragraphs quoting? Yeah.
Oh, okay. Yeah, because I was asking in that basis that even do they do that? Let's say in the APC exam you get something that is relates to text. Do you have to quote the paragraph that according to paragraph so and so this is not allowed, even if you're not writing a technical exam, but you are in the board exam?
Yeah, no, not necessarily. If the principle comes, so my view is that if the principle comes clearly, then you will not necessarily need to code the paragraphs. So for the APC I've marked, there was no specific requirement to code. They might put them so that they clarify, but no specific requirement for you to code them. Unless but even in that case, it was not necessary. Because there was this question on section 11J and 11I, and candidates needed to show an understanding of the difference, because the other one is a allowance for bad debts and the other one is actually a bad debts section. So they were specific in terms of using the paragraphs to clarify, but I don't think that was the expectation for the candidates. They just needed to know the difference between the two.
Oh, okay. Thanks, Rena.
Sure. So let's see. Yeah, then same process for the listing standard, because I think, we're going to come back to those, because I just wanted you to see how that works. And the IFRS, what to know about them. The IFRS are much longer. I know 82 pages was a little bit of a shocker, but the IFRS are much longer. One, they're longer because if you look, they've got the main standard. So do you see the main standard from objective all the way down to what? All the way down to, like, let's say 99, page 99 or paragraph 99, right? Then they've got what they call appendices. That's the IFRSs. You can see they've got Appendix A, Appendix B. Those are the definitions, A, and B, it is application guidance. So unlike the ISAs, they've moved the definitions to the end. That's IFRS. So just so that you don't get shocked and say, I could not find the definitions. So the definitions in the IFRS are at the end, usually Appendix A. Then B is now where they show you how to apply some of the principles that they were talking about in the main standard. So the application guidance form part of the standard. Then, in addition, there are examples that then work out example that will show you if you have to do a journal entry, if you have to do a calculation to apply that paragraph, this is how you do it. So the IFRSs are much longer because they are supposed to be very comprehensive and provide almost absolute clarity. So they've worked hard on them to just reduce the ambiguity. So main standard, then you've got the application guidance, and then you have the illustrative examples. Do you see that? So that is the primary difference between an IAS as well as an IFRS. So all those three are examinable. The main standard, application guidance, and the illustrative examples are usually for you to know how to apply some of these things. Hi, Elisheba?
Hi, Rendana, I'm here again.
You know, I was like, is it a coincidence that the name is common? But okay.
I
All
know,
right.
it's only that I saw it when it was advertised that there was a free course in the month of April. I said, let me jump in.
Okay, sure.
It's okay. I just wanted to ask something about these standards.
Yes.
To say that, okay, sometimes when I'm doing the videos like the CTA material, at times it's not very clear, and I wish I had probably comprehensive notes. So if I'm to read these standards with the examples, are they clear? Are they not difficult to understand besides the pages though?
So if you are reading what you said, if you are doing what?
Standards. If I'm to read, let's say from the IFRS handbook, if I'm to go to read a certain standard like this, the 82 pages that I'm complaining about.
So in some cases, you will see that what we do in the notes is that we bring things together.
Okay.
And I think that's sometimes the tricky part. Like, for instance, because I could then be aware that when we deal with identifying a lease, then I need some definitions in Appendix A. So I'll bring them back when I'm doing the notes. Then
Okay.
I need some application guidance, and I'm going to pull an example. So the identify a lease in the notes might then be the main text, the definitions, the application guidance, and so on. So that's what the notes try to do. They try to bring it together rather than leave it apart. Because sometimes when you read it in the standard will say you need to determine the lease term, and it stops there. And it writes in brackets application guidance paragraph 1, 2, 3. So you might need to say, wait, do I need to go there now, or do I need to go? Then when you go to the application guidance, it might refer to even paragraph 20. And you say, but I'm not in paragraph 20 yet, I'm still on 12. So that's what the notes try to do, to bring everything together.
That's okay. It's only that I was struggling with the highest cough. It's bringing fireworks.
Yeah, no,
So
no. IS12, it's usually one of the later standards, as you will see even here, because
okay.
it is a very integrated standard.
Okay.
Mm.
That's all right. Thank you. Then maybe one more question, like, well,
Sure.
for this course, like,
Yeah.
I understand you said we might not need to do all the standards. So is there probably a program, more like a guiding program, to say maybe go through these standards first? If you have free time, probably do these other standards.
All right. So and that's where I'm going now. Yes.
It's okay. Thank you.
All right. Cool. So yeah, I think we are behind on time, but let's quickly wrap it up now.